Top 25 Financial Controller Interview Questions and Answers. In this video, we will explore the top 25 interview questions that financial controllers commonly face. Each question is designed to assess their expertise and suitability for the role, highlighting key skills and knowledge areas. We will also provide insightful answers to help candidates effectively prepare for their interviews. Equip yourself with the necessary tools to confidently demonstrate your qualifications and impress potential employers in the competitive finance sector. 1. How do you ensure accuracy in financial statements? Ensuring accuracy in financial statements involves several key steps. First, I implement rigorous internal controls to prevent errors and fraud. Regular reconciliations of accounts help to identify discrepancies early. I also emphasize the importance of timely and accurate data entry by the finance team. Regular training sessions keep the team updated on accounting standards and best practices. Additionally, I conduct thorough reviews of all financial reports before they are finalized, ensuring compliance with GAAP or IFRS standards. Engaging external auditors for periodic reviews further enhances the integrity of financial reporting. 2. What accounting software are you most proficient in? I am proficient in various accounting software, with a strong focus on QuickBooks, and SAP QuickBooks has been my go-to for small to medium-sized businesses due to its user-friendly interface and robust features for managing invoices, payroll, and expenses. For larger organizations, I have utilized SAP extensively, particularly for its integrated financial modules that allow for comprehensive financial reporting and analysis. My experience with both systems enables me to adapt to different business environments swiftly, ensuring that I can meet the financial management needs effectively. 3. How do you handle month-end and year-end closing processes? Handling month-end and year-end closing processes involves several critical steps. I begin by ensuring that all transactions are recorded accurately in the accounting system. Next, I reconcile accounts to verify that balances match across different financial statements. I then prepare adjusting entries for accrued expenses and revenue, ensuring compliance with accounting standards. After closing the books, I generate financial reports, analyze variances, and communicate findings with stakeholders. Finally, I conduct a review meeting with the finance team to discuss any challenges encountered during the closing process and identify areas for improvement. 4. Can you explain the difference between accrual and cash accounting? Accrual accounting recognizes revenues and expenses when they are incurred, regardless of when cash is exchanged. This method provides a more accurate picture of a company's financial position, as it reflects all economic activities within a given period. In contrast, cash accounting records revenues and expenses only when cash is actually received or paid. This approach is simpler and may be more suitable for smaller businesses. While cash accounting offers a clear view of cash flow, accrual accounting provides insights into future obligations and receivables, making it essential for larger, more complex organizations. 5. Describe your experience with GAAP or IFRS compliance. I have extensive experience ensuring compliance with both GAAP and IFRS standards throughout my career. In my previous role, I led a project to transition our financial reporting from GAAP to IFRS, which involved detailed analysis of existing accounting policies. I trained the finance team on key differences, such as revenue recognition and asset valuation. I also established a compliance checklist to ensure that all reporting met the necessary standards. This experience sharpened my skills in attention to detail and understanding regulatory requirements, ultimately enhancing the accuracy and reliability of our financial statements. 6. How do you approach preparing a company's annual budget? Preparing a company's annual budget involves a comprehensive analysis of historical financial data, current market trends, and strategic objectives. I begin by collaborating with various departments to gather input on their anticipated needs and goals for the upcoming year. This ensures alignment with the company's overall strategy. I then analyze past performance, adjusting for any expected changes in revenue and expenses. Once I draft the budget, I present it to senior management for feedback and adjustments. After finalizing, I implement a monitoring process to track performance against the budget throughout the year, allowing for proactive adjustments as needed. 7. Describe your process for financial forecasting. Financial forecasting begins with gathering historical data, including revenue, expenses, and market trends. I analyze this data to identify patterns and develop assumptions about future performance. Collaborating with various departments is essential, as it provides insights into operational changes that may impact financial outcomes. I utilize statistical models and software tools to create projections, adjusting for factors like seasonality and economic conditions. Regularly revisiting and updating forecasts ensures accuracy, allowing for timely strategic adjustments. Effective communication of these forecasts to stakeholders fosters informed decision-making. 8. How do you manage budget variances? Managing budget variances involves a systematic approach. First, I regularly compare actual performance against the budget to identify discrepancies. When variances arise, I analyze the underlying causes, whether due to changes in revenue, unexpected expenses, or operational inefficiencies. Communication with department heads is essential to understand their perspectives and gather insights. I then collaborate with relevant teams to adjust forecasts or implement corrective actions. Regular reporting ensures that stakeholders are informed about significant variances, allowing for proactive decision-making and adjustments to maintain financial discipline and alignment with strategic goals. 9. What key metrics do you track to evaluate financial performance? Key metrics for evaluating financial performance include gross profit margin, net profit margin, return on equity, ROE, and current ratio. Gross profit margin indicates how efficiently a company uses its resources to produce goods, while net profit margin reflects the overall profitability after all expenses. ROE measures the return generated on shareholders' equity, showcasing the effectiveness of management in using equity financing. The current ratio assesses short-term liquidity, ensuring the company can meet its obligations. Monitoring these metrics provides insights into operational efficiency and financial health. 10. How do you contribute to strategic planning through financial analysis? In contributing to strategic planning through financial analysis, I focus on aligning financial goals with the organization's broader objectives. This involves analyzing financial data to identify trends, forecasting future performance, and providing actionable insights. By working closely with departmental leaders, I ensure that financial considerations are integrated into decision-making processes. I also evaluate investment opportunities and assess their potential impact on profitability and growth. Regularly reviewing key performance indicators allows me to adjust plans proactively, ensuring resources are allocated efficiently and strategically. 11. What steps do you take to ensure proper internal controls are in place? To ensure proper internal controls are in place, I begin by assessing the current control environment and identifying any gaps or weaknesses. I then establish clear policies and procedures that outline responsibilities and protocols for financial processes. Regular training sessions for staff help reinforce the importance of these controls. Implementing segregation of duties minimizes the risk of fraud or errors. I also conduct periodic reviews and audits to evaluate the effectiveness of controls, making adjustments as needed to address any deficiencies. Maintaining open communication with the finance team ensures everyone understands their roles in upholding these controls. 12. How do you identify and mitigate financial risks? Identifying and mitigating financial risks involves a systematic approach. First, I conduct a thorough risk assessment to identify potential risks, such as market fluctuations, credit risks, and operational challenges. I analyze historical data and current market trends to evaluate their potential impact. Once identified, I implement strategies to mitigate these risks, such as diversifying investments, securing insurance, and establishing robust internal controls. Regular monitoring of financial performance and risk factors ensures timely adjustments to our strategies, helping to safeguard the organization's financial health. 13. Have you ever detected or prevented fraud? If so, how? Yes, I have encountered instances of potential fraud in previous roles. In one situation, I noticed discrepancies in expense reports that suggested manipulation. I initiated a thorough review, involving data analysis and cross-referencing with vendor invoices. By collaborating with the internal audit team, we identified irregularities that led to the dismissal of an employee involved. To prevent future occurrences, I implemented a more robust expense approval process and conducted training sessions for staff on ethical standards and the importance of transparency in financial reporting. 14. How do you handle compliance with tax regulations and audits? Ensuring compliance with tax regulations involves staying updated on current laws and regulations. I implement a systematic approach by maintaining accurate records and documentation. Regular internal audits help identify any discrepancies early. I collaborate closely with tax advisors to ensure that our practices align with legal requirements. During audits, I prepare comprehensive reports and facilitate communication between auditors and our team. This proactive strategy not only minimizes risks but also fosters a culture of transparency and accountability within the finance department. 15. How do you manage and develop your finance team? To effectively manage and develop a finance team, I focus on fostering a collaborative environment where team members feel valued and empowered. Regular one-on-one meetings help me understand their strengths, career aspirations, and any challenges they face. I prioritize professional development by providing opportunities for training and mentorship. Setting clear, achievable goals encourages accountability while promoting skills enhancement. Encouraging open communication ensures team members can share ideas and feedback, which fosters innovation and improves performance. Recognition of achievements cultivates motivation and loyalty within the team. 16. Describe a time when you had to resolve a conflict within your team. In a previous role, a disagreement arose between two team members regarding budget allocations for a project. To address the conflict, I facilitated a meeting where each person could express their perspective. I encouraged open communication and active listening, ensuring both parties felt heard. After discussing the project goals, we collaboratively identified a compromise that aligned with our financial objectives. This resolution not only strengthened their professional relationship but also improved teamwork and project outcomes. It reinforced the importance of communication and collaboration in conflict resolution. 17. How do you delegate responsibilities while maintaining oversight? Delegating responsibilities effectively involves clear communication of expectations and accountability. I start by assessing each team member's strengths and weaknesses, then assign tasks that align with their skills. I establish regular check-ins to monitor progress and provide guidance without micromanaging. It's crucial to create a supportive environment where team members feel comfortable seeking help or clarification. I also utilize project management tools to track tasks and deadlines, allowing for transparency in the process while I maintain a high-level overview of the project's status. This balance ensures tasks are completed efficiently while I remain informed. 18. What's your leadership style when managing cross-functional finance projects? My leadership style when managing cross-functional finance projects is collaborative and adaptive. I prioritize open communication, ensuring all team members feel valued and empowered to contribute their expertise. By fostering a culture of trust, I encourage brainstorming and innovation, which leads to more effective problem-solving. I also utilize clear goal setting and regular check-ins to keep everyone aligned and accountable. Understanding different perspectives from various departments allows me to make informed decisions, ensuring that the project meets both financial and organizational objectives while maintaining a positive team dynamic. 19. How do you ensure timely and accurate financial reporting? Timely and accurate financial reporting involves several critical steps. First, I establish a rigorous schedule for reporting deadlines and ensure all team members are aware of their responsibilities. I implement a robust system for data collection and validation, leveraging technology to automate processes where possible. Regular reviews and reconciliations are performed to identify discrepancies early. Communication with relevant departments is essential for gathering necessary information and addressing any issues promptly. Continuous training for the finance team on best practices and regulatory changes also helps maintain accuracy and timeliness in reporting. 20. Describe your experience implementing or upgrading financial systems. Implementing or upgrading financial systems involves a structured approach for success. Initially, I assess the organization's needs and select software that aligns with our goals. I work closely with stakeholders to ensure buy-in and gather requirements. During the implementation phase, I collaborate with IT and external vendors to customize the system, ensuring it meets our specifications. Training sessions are conducted for the finance team to facilitate smooth adoption. Post-launch, I monitor system performance and gather feedback to address any issues. Continuous improvement is essential to adapt to changing business needs. 21. How do you manage cash flow and working capital? Managing cash flow and working capital requires a proactive approach. First, I closely monitor cash inflows and outflows using financial forecasting tools to anticipate shortfalls or surpluses. Regularly reviewing accounts receivable and payable helps identify potential delays in cash collection and optimize payment terms. Implementing strict inventory management practices ensures that capital is not tied up unnecessarily. I also maintain a cash reserve for unexpected expenses and analyze working capital metrics to ensure efficient use of resources, allowing the business to operate smoothly and meet its obligations. 22. How do you partner with other departments to support business goals? One effective way to partner with other departments is through regular communication and collaboration. Establishing cross-functional meetings allows finance to understand the unique needs and challenges of each department. By aligning financial goals with departmental objectives, finance can offer tailored support. Providing financial insights helps departments make informed decisions, while involving them in budget discussions fosters a sense of ownership. Additionally, creating joint initiatives, such as cost-saving projects, strengthens relationships and encourages teamwork towards achieving common business goals. 23. What's your approach to cost control and efficiency improvements? Cost control involves analyzing current expenses, identifying areas for savings, and implementing strategies to reduce costs without sacrificing quality. I begin by assessing operational processes for inefficiencies, utilizing data analytics to pinpoint excessive spending. Collaborating with department heads is crucial, as they provide insights into necessary resources and potential cuts. I also advocate for a culture of continuous improvement, encouraging teams to suggest ideas that promote efficiency. Regularly monitoring key performance indicators ensures that cost-saving measures align with business objectives and do not hinder growth. 24. How do you evaluate the financial health of a company? Evaluating the financial health of a company involves analyzing various financial statements, including the balance sheet, income statement, and cash flow statement. Key metrics such as liquidity ratios, profitability ratios, and debt-to-equity ratios provide insights into the company's ability to meet short-term obligations, generate profits, and manage debt. Additionally, examining trends over time and benchmarking against industry standards helps identify strengths and weaknesses. A thorough review of operational efficiency and market conditions also contributes to a comprehensive understanding of the company's financial position. 25. Describe a challenging financial situation you've handled and the outcome. One challenging financial situation I encountered involved a significant budget shortfall due to unexpected market fluctuations. The company faced potential layoffs and project cancellations. I gathered the finance team and conducted a thorough analysis of expenses and revenues. We identified non-essential costs that could be temporarily reduced and renegotiated contracts with suppliers for better terms. This proactive approach allowed us to stabilize cash flow without losing key talent or projects, ultimately turning the situation around by the end of the fiscal year, leading to a successful recovery and a renewed focus on strategic growth. In this video, we've explored the top 25 financial controller interview questions and answers, equipping you with the insights needed to excel in your interview. Understanding these questions not only prepares you for what to expect but also helps you articulate your experience and skills effectively. Remember, preparation is key to making a lasting impression. If you found this information valuable, please give the video a thumbs up and subscribe to our channel for more insightful content. Your support helps us continue to provide quality resources for your career development. Thank you for watching.